Well, General Electric's losses shrank last quarter and its revenue was little changed. On a relative basis, it was a strong performance for GE. It also raised its forecast for cash flow from industrial operations to $2 billion for the full year. Those shares are surging by 11%. Joining us now, Jim Corridor, Director of Industrials Equity Research at CFRA. It would be difficult, I think, for expectations to get any worse surrounding General Electric. That said, when you look at this cash flow situation now, it does seem, not even on a relative basis, but maybe even on an absolute basis, that things are improving.
Yeah, when you look at one of the main criticisms of GE, it was that their cash flow was declining and was going to get much worse, and there was no hope for it to get better anytime soon. Here we are in Q3 of 2019, and the cash flow numbers were better for this quarter. The guidance was better, and things seem to be slowly moving forward for the company, and it was good news today.
Okay, good news is something we welcome, but help us understand. We always talk in adjusted metrics, but the losses, at least when you talk about revenue, unadjusted, it was $9 billion, better than it had been in the last quarter. But how much longer can they sustain that?
Yeah, well, obviously there's some problems at GE. The power division continues to see orders down, but there's a lot of great assets at GE. The aviation business is seeing strong growth. Healthcare is doing fine. The renewables business is seeing surging growth, though at low margins. So there's a lot of positives to look forward to. Power is slowly coming under control. The order flow is decelerating. So we're seeing it bottoming out, and hopefully we'll see improvement next year. But there's a lot of moving pieces there, and some of them are moving in the right direction. And there's some signs of hope. The stock is priced for failure almost, and we're seeing that GE is making progress.
I also wanted to ask you, Jim, about the long-term care liabilities. That's an issue that Harry Markopolos had flagged at the company to much fanfare. And it looks like that the amount that they are setting aside to, the reserves they're setting aside for that are smaller than some analysts had estimated. But what about going forward?
Yeah, that was another positive for Q3 because it was an important test this quarter where GE was going to look at their liabilities and retest them. And they took a $1 billion charge this quarter for that, mainly due to lower interest rate environment, which changes the discount rate assumptions. There is some hope because they are getting higher rates than they expected on those assets as well. They are going to have to continually retest it, and there may be more charges coming in future years. But these are very long-lived assets, and it does seem that things are a little bit better than the worst fears on that asset.
Hey, investors. Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.